All right, hello everyone and good evening. Welcome to another edition of my view on the markets. Today is Sunday, December 18th, and I'm slowly migrating everything into TradingView, so that would make things better. I'm also going to be more consistent with what we're going to talk about every time I do one of these, even though I do repeat myself quite often. I've updated my blog. Here is the latest Bitcoin group. I'm also about to start getting into other types of podcasting, and I want to start interviewing some people if I find the time for that. But let's jump right into the markets. I'm not going to do any economics. I mean, it's also year end. There's not much going on. I went over that over the last few weeks. And because it's the weekend, I'm going to focus on weekly charts. And then during my midweek video, I'm going to focus more on daily charts. And then at the end of every month, I will look to do more of like even, let's say, a monthly chart. So we're going to go way back and look at longer trends. All right. So what I usually do is it's Sunday night. I don't know what happened Friday evening or Saturday or anything can happen. So I glance at the futures and how they open. I see gold is up a little bit. Oil is up. Markets are fairly flat, slightly up. VIX at 1270. Wow, was still going down. All right, and now we're jumping right into the markets. Here is the daily chart of the S&P 500. There it is. And this is exactly how we left it off last week. And I think on Thursday or something, I did it. I'm going to leave these as they are. I know the S&P is up right now in the pre-market, but I really think that the S&P has topped. And I think we're going to have a little bit of a pullback. So I am looking for the S&P to take a little break, but I think it's going to be a fairly short break because there is nothing on this chart that I see that's going to stop it from going up. The RSI has made a higher high. The MACD has made a higher high. The price has made a higher high. There is really nothing there. There's no significant candle that looks like it'll be a deeper pullback. We didn't go that far up above the previous high. I mean, there's really nothing there for a long-term pullback. I'm going to leave this chart exactly as it is, and we're going to take a look at it again in the middle of next week. I'm not even going to talk about the counts that you see on the chart. There is a note here. Please go to my last video, which I believe was Thursday, and one of those days. And I talk about it some more. But let's take a look at the weekly chart. And this is a little more interesting. I'll put these weekly charts together just today, actually. And I'm gonna start doing monthly charts, and we'll get into those as well. And I keep my charts fairly simple. I want this video to be for both beginners and more advanced traders. But there's nothing here that's gonna be completely crazy. I actually like indicators that other traders are looking at due to the self-fulfilling prophecies of a lot of these indicators, and I understand that. So just I put these green circles there. I mean, these are just my textbook perfect reversal candles, and they happened at points of interest. Like this happened right at the 50-day moving average. This is a weekly candle, so it's intra-week, so it's hard to call something intra-week noise, but I'd have to expand the daily candle to see how it reacted along with the 50-day moving average. And this here also pulled back to the 200-week moving average. And this allowed me to throw the Fibonacci's on here, only because I can kind of do a projection. I'm not a huge fan of Fibonacci projections, but the Fibonacci projection is 2034, and we're far from it. Now, what I do find interesting on the weekly chart, and I literally just saw this 20 minutes ago when I put the chart together, is this doji reversal candle. And I might as well, oh, it's not going to be red. Oh, wait, that's text. That can be blue. I'll make this red. And oh, it's not going to be the word election, but it's going to be the word doji. We're going to put that in. And let me see if I can make this. How small can I make this thing? I guess that's as small as it goes. All right, so I'm going to stick this over here, and we'll see how that progresses going forward. Now, a doji needs confirmation. So just because that's a doji, that doesn't mean all that much. However, the low of this doji, oh, I don't have that turned on. Anyway, guess we're doing this manually. The low of this doji, I'm gonna round off. I'm gonna say 2250. So if next week it's looking like the week is closing below 2250, I will take this doji seriously, and it will be a beautiful reversal candle. Now, if it is a reversal candle, how low can things go? I don't think they're going to go all that low, and there's so much support. The obvious support is the round number 2200. It'll get us close to the previous all-time high. And below that, you have this cluster here, which is the top of my Fibonacci line. And that would be around 2135. Below that, you'll have the 50-week moving average. So there's so much support here. I really don't see this bear market lasting very long. Maybe go down about 5%. I really like what Tom DeMark had to say once he upgraded his view to call for a top at 2,275, followed by a 5 to 6% correction. So if we correct 5% from the very top of, looks like, 2,277, so 5% of that, oh man, math on live air. All right, so 10% of that is about 225 points, and half of that would be about 112. So you're looking at a 112-point correction. So if we drop 100, and I'll give it 120 points. So we're looking at a drop to about 2150, but not much more than that. So here's 2200, here is 2150. So it'll put us like around this area. And that's kind of what I'm looking at, but hey, trading is hard. I just put in these crosses because they were big and obvious. Yes, I see that there's a MACD bullish cross, but I'm not gonna. I'm ignoring this. I have no reason to ignore it. I just think that we're very toppy after the election run. All right, let's go to gold. I know people are asking me to do silver, and I guess I'll add a silver chart. I'm just not ready with one today, so we are gonna skip silver today, but I'll try and sneak it in. But to me, silver is just like gold. This is the daily chart. I know my charts are probably a little boring, but you don't really. I mean, if you start putting too much crap on your charts, I don't know. I don't see that as being productive. Sometimes simplicity goes a long way. And we had the bearish cross to the moving averages, and I'm a big fan of when you have one of these crosses and the price is already far below it. I tend to expect it to pull back into the cross, which never happened. And then I thought that this area would provide decent support resistance for obvious reasons, and that also did absolutely nothing to stop it. Gold is just incredibly weak. I do think it's overdue for a short-term bounce, and then gold's going lower. Here's the big question: will this year, where will this year close? How far will it pull up? If we close the year in the vicinity of 1120. I'll even go as far as like maybe 1150. If we close the year below 1150, I would be very, very bearish going into next year. So I am curious. This is the daily chart. These were the candles that I put in. Sorry, the arrows I put in midweek. I'm not touching them. Let's see how that develops. This is the weekly chart I just put together, again, like half an hour ago. And this will be the chart I will reference over the weekend. I'm not really going to look much at the daily charts. I have two sets of Fibonacci's here, again, because they were obvious. We have the high. It looks like the high is 1920. I believe the real high was higher than that, but these prices adjust because they're futures contracts, and there is backdated adjustments. Those that trade futures should know what I'm talking about. So I thought that the real high was a little higher than that in the futures market. I think it adjusts in order to create a smooth path, in order and not to have gaps. But I'm not sure how TradingView does it. So that's the other thing. So I took the Fibonacci from the all-time high down to the low of last year, November 30th, I believe, was the low. And it was very, very interesting. I mean, I haven't really thrown Fibonacci's on this, but the bounce from last November until we topped this summer hit exactly at that 38% Fibonacci line. Literally just hit right onto it. And that allowed me to drop a smaller version of the Fibonacci's from the low of last year to the high of this year. And as you can see, the 38% line was a very nice support. But then when we broke it on the way down, we just blew right through the 50% and right through the 61% line. And now we're in no man's land. And we're clearly oversold. I mean, the RSI touched the 70 line. I know the MACD is still dropping like a rock. There is not. Yeah, I'll draw one thing for the sake of drawing, I guess. That should be red, and this should be light red. Once the MACD crossed here, it was kind of over, and now we're at the oversold condition, and there is some divergence, right? So in hindsight, which is always 2020, and maybe I'll draw these lines later, there is a low here corresponding to a very low RSI and a very low MACD, and then over the following 2 years, we made a lower low, obvious lower low, but your indicators were higher. And I know it happened here as well, and here as well. So, and if you played these for the ultimate bounce, you would have gotten burned. But eventually, this divergence took its toll. So the question is now, what's going to happen? And I think that once gold consolidates a little bit and maybe goes up, we're going to have one hell of a fall. And I don't believe in double bottoms. So when we fall, look out below, because I'm very, well, not very, but I'm pretty confident that we're going under 1,000. And I've taken a break from trading futures, and I feel less biased when I talk about the future of gold when I have no actual position in the market on gold. So this way I'm not, I'm not pulling for my position, and I'm also not betting against my position. So I have no position on gold right now, but I will probably be tempted to short gold, especially if it pulls back to that Fibonacci line of like 1170, and then starts to weaken a little bit, because I want to see like a lower RSI than this, even though that would be difficult, and a lower MACD than this, and again, that would be difficult. and it would literally require like another $200 crash in gold over a span of about a month or two, which is going to be brutal. I've talked about the long-term charts of gold in my economics video a few weeks ago. I'll probably talk about it at year's end. Probably do a bunch of videos once the year ends with year-end closing. And what I've been saying for the last year and a half or 2 years, even more, my ultimate gold bounce would be the day the news is reporting that people like Peter Schiff have been people have filed a class action lawsuit against guys like Peter Schiff for constantly selling gold and telling people that it's going to go up and up and up and up and up, and it never does. So when these guys start dealing with lawsuits from unsatisfied customers, and most of the time their customers are satisfied no matter how much money they've missed out over the last 10 years by not putting it in the stock market, for now they seem to be satisfied. But if gold drops to 700, I'm pretty sure none of those customers would be as satisfied as they still are. I got a currency question since I'm doing these live. Any views on the yen at the moment? I don't really care about the yen at all. The reason I couldn't care less about the yen is because it's not a free-floating market currency. It's controlled by the Chinese, and I have no idea what the Chinese are going to do, and it's not all that important to me. And I've tweeted out and I've talked about the movements of the yen. I mean, everyone is screaming about the yen. Meanwhile, the yen is down like what, maybe 10-15%, and the euro is down like 40%, right? So it's I don't really care about pegged currencies. I just don't, unless the peg breaks, right? But I'm not Soros. I don't have the money to continuously bet and wait for the peg to break. Even though the Swiss peg breaking would have been a really nice trade. And I think all the pegs are gonna break, because I think the dollar is gonna go up at least 20% in the near future, and maybe 30%, and maybe 100%, right? So I'm very bullish the dollar. So every peg against the dollar is going to break. It's only a matter of time. But I don't really. Oh, I'm sorry, that was the yen. I'm talking about the yuan. Damn. Get my currency confused. No, I don't actually pull the yen chart. For some reason, the yen has never really been, again, kind of similar to the yuan. The yen in Japanese currency, for some reason, I don't find it all that important. Maybe I'm the weird one, because I know the Bloomberg seems to focus on the yen a lot, and I don't understand why. I just don't. And in the past, when things didn't make sense to me in economics and finance, in a lot of this stuff, I used to say, well, I'm just not smart enough to figure it out. These guys know better. And after continuously realizing that if something makes absolutely no sense to me, it's only a matter of time before it doesn't make any sense to anyone. So now I take the position where if something doesn't make sense to me, then I've been proven right so many times that it just doesn't make any sense in general, that I'm now taking the position that the yen currency doesn't really matter to the global economy. All right, that's kind of my view on the yen, which is why I don't look at it. All right, oil. I'm not going to talk about the daily. This is the daily chart of oil. It's already trading. It's up like $1, or like up like 50 cents. These were my arrows from midweek last week. It looks like that red arrow is going to be proven incorrect. If we're already, this is a daily chart. If we close today above the previous close, which is basically if we close at the current price or higher, I would scratch this red arrow, and we're probably just going back up. But as you can see from my arrows that I put together, whatever pullback this was going to be temporary. And I'm in general bullish oil, and I remain bullish oil. When the MACD crosses, or when the RSI gets back to overbought, I can start talking about another pullback. I will leave this arrow a little longer, but in general, I'm fairly, because I want to see how this candle closes today's candle or Monday's candle. But in general, I'm bullish oil. Let me see if there's anything interesting here. And there isn't anything interesting to talk about. Weekly oil looks bullish to me, especially this 50-week moving average. And I've talked about it even back here when I saw it turning, and then you had this perfect reversal pattern, and then it turned, and now I am eyeing this 200-week. Bought, there is nothing overbought. We had this very obvious support at the 80 mark, and we just blew right through it with absolutely no pulling back. We did have this comeback here, but it was short-lived. So we have this divergence, and then more divergence, and more divergence. And see, top is taken out. Then you have this 70, 50, 200 week, and then we can even go higher all the way to 80. The days of $100 oil, I believe, are done. I could easily be proven wrong, but I am bullish for now, but bearish. Let's throw some arrows on here. But then bearish, right? So this arrow is actually going to be tough to draw because I'm going to split the middle here. I'm pretty confident we're going to 60, but again, I hate double tops. So I'm going to put this arrow right here. And that's probably where the 200-day will be. And then if we're breaking above it, then 80 is very, very possible. But that's what I'm looking at. But after that, I am going to put, I just want to make sure that the world knows that I am not bullish oil long-term by any means. Now, of course, these arrows are going way into 2017, and I will be changing my mind on that if the situation calls for it. All right, the dollar. This is a long-term view of the dollar, and we are now above the 62% Fibonacci, and off we go up and up and up. There might be some minor pullbacks. I'm not going to try and time the US dollar. It's very schizophrenic. It can will move around. This is why I look at the long-term view, and the long-term view is telling me we're going back to all-time highs of 120. At least I'm assuming they're all-time highs. My chart only goes back to 2000. And we're probably going to break that high and go up, as crazy as that sounds, of the US dollar hyperinflation and printing. Remember, you are the best three-legged dog in a dog race. So it will go up because everything else is a basket case. And speaking of basket cases, let's talk about the euro, because that is leading that charge. And it's going up a little bit. This is the daily chart of the euro. I really don't care much about the daily chart of the euro, other than when it breaks, 8-year lows. But be a little pullback. 1.05 will be a good area, and then down we go. So I'm going right to the weekly chart. This is the weekly chart. We have just made a new intra-week low at the very end of the year. So this is telling me that we're going to close the year new. Let's see. God, this is going to be bad. Yeah, you know what? I'm gonna look at monthly charts at the end of the month, which will maybe I'll look at yearly charts. Though looking at yearly charts for the euro doesn't really mean anything. So just for clarity purposes, well, all right, I'll be reasonable. We'll hit parity in the near future. I want to extend this chart all the way down to like 50 cents or low parity. So I'm just going to do that. British pound. So if you've been watching the videos, this is the daily chart of British pound. And as you can see, the 50-day moving average is starting to turn up and is price, which is why I'm way more bullish on the British pound than I am on the euro. You can also look at this monster divergence in the RSI. Oh, sorry, confirmation in the RSI, divergence in the MACD. If you go out further, you have divergence in the RSI, but confirmation in the MACD. So they're very, very opposites of each other. But I am generally more bullish on the pound. This is the weekly version of the pound, and I like this one better. Again, even for divergence purposes. And the dollar is going to go up, so the British pound is not going to do much, but it will be significantly better than the euro. So the one that I would be curious about is the euro versus the pound. And oh man, I wish I saw this earlier, because I've been talking about the euro falling against the pound, and I explained why that is. When the Europeans realize their currency is imploding, it's a lot easier for them to move to the pound, because they're more familiar with the pound than they are with the US dollar. So a lot of them will feel more comfortable not only moving to the United Kingdom, but also investing in them. And especially if the view that the United Kingdom will become some kind of an island of misfits because they left the Eurozone. It's crazy, right? So when that rhetoric dies down and people realize that the world in the UK will not end, things will be fine. So the euro I expect to drop against the pound. This is the EUR versus the pound. So I don't trade currency, so I always have to think twice. So this is the price of the euro against the pound, and I expect the price of the euro to fall, making new lows. Might actually be I don't trade currency, but this might be a trade I would be interested in. All right, finally, Bitcoin. I believe Bitcoin has just made a new high, not an all-time high, but a new 3-year high at around 792 or something like that. Let me see. These are both Bitfinex, or is one of them? This is Bitfinex. This is Bitfinex. All right, so they're both Bitfinex. So on Bitfinex, we have 791. No change here, right? We're still staying at the bottom of our bullish channel, which is actually pretty damn steep. I will gladly take this $5 to $10 a week Bitcoin appreciation. That Bitcoin's already been the best performing asset this year, but that is not saying much, because last year it was like one of the worst performing assets. Well, last year was kind of flat. 2014 it was like the worst performing asset. So but yeah, these were my arrows for the last 2 years of this chart. I don't like to backwash. I leave everything there. And here you go. I'm expecting to hit the top of this channel. When will this run happen? Well, hopefully after SegWit, and because of SegWit, right? So please read more about SegWit and why it's a good thing. And this is my other chart. Again, I have no idea what chart pattern this is. It could be a triangle. It could be a cup and handle. It could be a giant cup and handle. If it's a giant cup and handle from all the way back there, that's about a $500 up move. So I'm bullish. What is this? Oh yeah, this is my this is the Brave New Coin Liquid Index that unfortunately stopped updating. I will harass the Brave New Coin team again and try to end the TradingView team, and hopefully we can get that up and running. I really liked this index and charting against it. All right, so that's it. Let me see if I have any questions. I actually did this in 30 minutes, which is a huge improvement. I'm going to try and stick to that. Let me see if there's any questions, because I do these live. All right, so I don't see any more questions. I got the yen and the yuan confused earlier, but I cleared that situation up. Oh yeah, someone asked me to do a chart of gold in British pounds. I will. I'll try and get to that next week. Maybe I'll say a few minutes on that, and maybe I'll start taking a look at US dollar versus Canadian dollar and US dollar versus the Mexican peso, only because I'm going to those countries in the near future. So maybe I'll start looking at currencies of the countries I'm going to, just to be fully aware of the situation and to take a look if I should exchange currency earlier than later. I got a question. What's a good way to short gold? Well, if you know how to trade futures, that's the best way to short gold. You just sell a future, a very leveraged instrument. Another way to short gold is to buy puts. If you understand how to trade options, is to buy puts on GLD, and then you can do that. All right, so that's a question. All right, guys, on that note, I am going to sign off, and good luck with your trading. See you all mid next week.